Good morning or afternoon, everyone. Thank you so much for joining us. We're just going to give it a few moments while we let everyone come in, as I see some people in the wait room. Just a reminder that this webinar will be recorded, and we will be sending out the recording shortly after. If you do have any questions, please put them in that Q&A section below, and we'll make sure that we can get to as many of them as possible. If we don't get to them, you feel free to send an email to ir@hydreight.com. I'll put that information in the chat for everyone, but we'll just give it a few more moments while we let everyone join here. If you can just put in the chat and make sure audio is working, if someone can just let us know in the chat, give us a thumbs up, or just let us know, that would be greatly appreciated. Perfect. I think we'll begin. Thank you so much, everyone, for joining us here today. We have some of Hydreight's executive team, and I'll pass it over to CEO and founder Shane Madden to go over a presentation for you for the Q2 2024 results and a corporate update. Over to you now, Shane.
Thank you, Abby. Welcome, everybody. Always very excited to talk to our shareholders. Some exciting results to go over, and some updates as well. Again, just reiterating, I hope everybody had a great weekend. So I'd like to just go into the first portion of the presentation. Again, there will be some forward-looking comments, so please look over the disclaimer and the forward-looking information. We have quite a diverse shareholder roster, so to speak. So I'd like to go over again just kind of the overview of the company, the direction the company is going, some of the exciting things that have been going on, in case anybody has missed anything on our journey or where the trajectory is headed. So the first thing I suppose I would like to kind of ascertain or to outline is the difference between Hydreight Technologies and Hydreight, just one vertical. So if you've heard things in the past, you'd have heard us talking a lot about Ubers for nurses specifically, and our mobile medical clinic network. I'd like to kind of go over what Hydreight Technologies' more holistic offering is, which was always the direction of the company. So think of Hydreight Technologies as three companies in one. It was always the goal of the company to create a structural platform that various types of offerings can sit on top of. We'll go into more of the structure of the overall medical company, nationwide medical company shortly, but just to kind of go through our three verticals here from a software offering. Most people on the call will know about the mobile medicine aspect, the Uber for nurses, as we're called, the Hydreight Nursing, which was essentially the first go-to market vertical. Anyone who has heard us talk about the trajectory of the company or the evolution of the company would have heard us talk about, as we grew out that network, we solved a lot of problems within the industry itself, typically for bricks and mortars, from a compliance standpoint, from a technology standpoint, from a usability standpoint, connection with the customer, connection with the patients directly. That's our second vertical. You'll hear it referred to as white label. We'll go into some of these things a little bit later in more detail. But we solve a lot of problems for our bricks and mortar. That has been growing alongside our Uber for nurses, which is obviously our flagship, what we're best known for. The third thing you'll hear us talk about today is our direct-to-consumer, or VSDH1 software offering. Again, this sits on top of our overall medical practice, which is nationwide, and our overall structure. So we have three different digital health offerings, giving us a holistic coverage of offerings within this space. I don't want that to get unrecognized as we go through here. The financials that we're about to go over or go into a little bit later are only reflective of two of these. So the direct-to-consumer VSDH1 is something that we have been building out very aggressively in the last 12 to 18 months. We'll go into some of the competitors in the space and the offerings and the great opportunity that provides. But Hydreight Technologies is far more than just one offering. Now, obviously, there is incredible opportunity still on our mobile medical Uber for Nurses model, our bricks and mortar white label offering. But there is a third vertical here, which is super exciting that I'm very excited to talk to everybody about. So just wanted to kind of give an overview here as to our holistic offering. The next slide here, just to explain again, there will be some shareholders on the call here today that have not got the full understanding of possibly our structure. So I just wanted to go over that very quickly. We are essentially a medical company underneath it all. We have different software offerings for the consumers, but we are essentially a medical company. So that's what the PC network aspect is referring to here on this slide. From a structural perspective, we are a medical company that has vertically integrated our medical direction, our physician network, our pharmacy network. We've brought on obviously nationwide labs as part of our roadmap for the last couple of years, as we've been expanding our offering very aggressively out from our initial flagship product, which was IV therapy, into some of the more higher levels of medicine like NAD plus, into the peptides, which are the future of most of the digital health space, and obviously a lab component there. The GLP-1s is a huge piece of that as well, which you'll hear more of us talking about again. So our structure essentially vertically integrates our medical company, our medical direction, our physician network, our pharmacy network, and our lab network. And obviously our software engagement with our customers. So when we talk a little bit later, our Uber for Nurses model is obviously a huge future for the company. There's 4.5 million nurses in the US, RN specifically. Some of the numbers we talk about here in the later part of this presentation. We're looking at 2,600 nurses, so 2,600 of 4.5 million is what's on our platform currently on one of our three verticals. So again, huge opportunity there. We'll talk about ways that we're going to expedite that, hopefully, and really drive that number up. But basically, wanted to kind of give an overview here of our structure. So medical direction to our pharmacy network. Patient specific is something that we'll talk about mainly on our VSDH1 offering or our vertical. For anybody who's new to that space, that is essentially the going to a place of business, i.e. a website, having a telemedicine visit, and having some pharmaceuticals for that treatment delivered directly to your home for self-administration. So what we've done at Hydreight Technologies is we've built a foundation that has multiple service offerings for the digital health space. So obviously our Uber for Nurses involves a healthcare professional at your home being able to give a medical service. Our direct-to-consumer, i.e. VSDH1, is going to be similar to a Romans or a HIMSS model, but with a very, very, very big difference from a business perspective, which we'll get into. And obviously our bricks and mortar solution gets us into the traditional bricks and mortar setting from a health and wellness perspective. So at Hydreight Technologies, we've basically covered the gambit of offerings, which is very exciting for the future. The QR codes and widgets here is really just how we integrate with either the bricks and mortars or the VSDH1. So moving forward, how those verticals essentially are monetized, I will cover very, very quickly. The nurse network, we should all know about it at this point. We have a subscription-based model with a service sales facilitation fee, and obviously our vertically integrated pharmacy. We are the supplier as well with our pharmacy network. So the same model applies to the other two verticals, which is the bricks and mortar white label. Again, our bricks and mortar solution and our VSDH1 virtual solution. Again, the virtual solution is the newest of the three. None of the monetary upside of that has been recognized yet in the Q2 financials. We're in a beta mode there. So we're looking to see that being recognized in Q3 and Q4 of this year and into next year, of course. Some of the things to touch on here is because of our structure, obviously having the pharmacy network, the lab testing, which is the expansion of our services on our nurse network. these things have played a major part in our continued growth, which you'll see from year on year and quarter on quarter has been very very consistent. Obviously, looking to expedite those with the VSDH1 vertical. So those are kind of structural overview. Just to kind of give some comparisons as to each vertical. Obviously, there is no direct competitor when it comes to our nursing network. That's why we've kind of left that blank there. There is no direct competitor to Hydreight, the nursing platform. What I mean by that is there companies that offer a similar service, end use service? Absolutely. But is there a company that has thousands of nurses across all 50 states offering mobile medical services in a compliant fashion? No, there is not. We are the first company that has allowed independent nurses to be independent contractors in a compliant setting. First to market, first to do it in all 50 states, a lot of firsts there. Obviously, the trajectory of that vertical has been fairly aggressive over these last couple of years with our expansion, but also our expansion of our services, as I said, from the IV therapy to the more higher levels of medicine, all the way to GLP-1. One thing to note regarding our nurse network is the opportunity for the nurses is incredible. We all know the stress and the strain that is on the overall healthcare industry. One of the things we'll be looking at this year is to take it to the next level in terms of healthcare organizations relationships. So basically providing services in a very large scale per state through large healthcare organizations relationships, B2B. So that is something from a corporate perspective that we'll be looking at very aggressively. Our bricks and mortars, obviously we've talked about as our structure provides a compliant turnkey solution for a lot of the bricks and mortars. Obviously, that is no direct competition to our nurse network. It's a very, very different model. So it's in addition to, as opposed to replace of. Some of the competitors there are some of the companies that you'll see in that space are Zenati, Jane, and Wheel, obviously, billion-dollar companies. So the opportunity there is significant. One of the things I would say that differentiates us is we're vertically integrated. They offer one of the pieces of the puzzle. Our offering is holistic. Somebody can come to us and they might need legal compliance for a corporate practice of medicine state due to our structure. They may need a medical director. They may need a physician network to service the services within there. They may need EMR. They may need other types of tech. So it's a much more all-encompassing solution. I think the biggest probably step forward for the company in the last 18 months has been the continued growth of each of these verticals, and not a very narrow vision, but a very wide-ranging vision as to digital health as a whole. The direct to consumer, which is the VSDH1 vertical that I have talked about, some of the competitors in that space are Roman, Hims and Hers, Felix, and Truebill. I think we all know the size of those. One thing to be differentiate our company as well is we have a B2B2C model. So we are not in direct competition with these companies. We're allowing other companies to join our platform and market that company. We are the medical entity underneath it all. Obviously, through a tech interaction, we're able to service their clients. So the actual potential upside is significantly higher than any of these one companies. We can have thousands of Romans on our platform. And our medical company is essentially the service engine of all of those. So from a differentiating standpoint, I think this is a massive opportunity. As I said, from a financial perspective, none of that has been recognized in the Q2 financials. That opportunity is all in front of us. So again, there's 3 verticals within the Hydreight technologies. I wanted to make sure that everybody understood where the company is headed from a holistic offering. So same base structure, same overall structure that we've been working on, 3 different offerings. Obviously, in the digital health space, there's different types of offerings. So we wanted to be a holistic solution, and this is not something new. This is something we've been working towards for a number of years. We've touched on it in various presentations, but it's nice to keep the message streamlined in many ways. But we wanted to kind of really clarify this today so that everybody understands the direction the company's headed and the massive opportunity in front of us. So going over some of the actual financials for Q2 of 2024, obviously very exciting in terms of our continued growth year on year and quarter on quarter. So our top line revenue non-GAAP was 5.59 million. These are Canadian dollars, 27% increase on the previous year. Our GAAP revenue was 4.1 million, 52% increase on the previous year. Our gross margin 1.56 million, 44% increase on the previous year, and our adjusted EBITDA $218,000, 148% on the previous year. What you'll see here on a year-on-year growth is pretty consistent. Obviously, what we're trying to do as we grow these as the numbers grow, we've been trying to structure the company as well to be able to sustain the growth, as well as those big inflection points with some of the things that I'll go into in a little bit. But 2020, 0.73 million. These are top line non-GAAP. 2021, 2.22 million. 2022, 8.43 million. 2023, 17.05 million. And the first 2 quarters of 2024, 10.46 million. So again, the numbers back up the growth in the amount of nurses, the growth in the increased offerings. Our GAAP revenue, 0.45 in 2020, 1.2 million in 2021, 4.27 million in 2022, 11.51 million in 2023, and the first 2 quarters of 2024, 7.48 million. Obviously, very excited for the trajectory and the continued growth. However, with the opportunity in front of us, and again, you'll hear me talking about this a lot, these are not exactly bullish. The opportunity is incredible in this industry, in this sector, but also with the verticals that we have at Hydreight Technologies. This growth is, for me, is on the lower end of what I would expect. So here's just a graph representation of the numbers that we went over. So 2021, 22, 23, and the first 2 quarters of 2024 from a top line perspective and a GAAP revenue perspective. Just some of the key investment highlights that I'd like to go over here. We have revolutionized the mobile healthcare industry in a way where we were first to market for Hydreight Technologies. So the creating of the landscape where you have mobile medical nurses across all 50 states providing compliance services. The eventual goal in that vertical is not only to increase the amount of providers, as I mentioned earlier, 2,600 RNs is essentially the numbers that we just covered, with 4.5 million nurses in the US. The opportunity is certainly in front of us. Creating large relationships within that space to utilize the network is one of the things that we're working on very aggressively here, and in a number of conversations with that we look forward to updating everybody in the future. But being the first line of defense for the organization, for the healthcare organization as a whole, is the eventual goal there. Obviously, in anything, you have to build your way up. You have to create the structure first. You have to be able to make it compliant. You have to be able to sort the supply chain, the doctor's network to the physician network to see the patients. And then you have a base structure. That's what I've been saying for the last 12 months as to where we are with that vertical. The explosion or the the inflection point there is when we start partnering with other large healthcare organizations and become the service army for those hospitals, other organizations, even things that are outside of that scope. Those are conversations that we're having at the moment, as well as the organic growth that you have seen on the previous numbers. Those are exciting. As I said, the numbers only reflect two of the three verticals. VSDH one, which is a B2B to C in the direct to consumer healthcare space, is exceptionally exciting. Not only because of the types of services, our recurring services, so these would cover peptides, GLP-1s. Obviously, there's some major players in that space. The differentiating factor for us is we have spent a number of years building a healthcare organization that the software sits on top of, not just the software, and work backwards. So we are in a unique position to be able to offer and leverage our structure to businesses who want to spend thousands and thousands and tens of thousands of dollars a month on driving patients to our organization. So that's extremely exciting, something that we've been working aggressively towards, and it complements our other two verticals, again, in addition to, not replace of. Our capital market structure, we have kept the structure extremely tight, 38 million outstanding shares. The other exciting thing for the company has been the constant growth of the departments. We've been spending in the right areas. We've been spending aggressively on things that are expanding our offering, expanding our verticals, while structuring the company underneath to support all of that growth. So it's been a really difficult 12 months in terms of achieving all of these things, but the numbers reflect the expansion of not only services but verticals. The structural work we've been doing has supported that growth, so we're excited for those things. Obviously, the path to profitability, we went to cash flow neutral to cash flow positive, so we're going to continue that growth. Some of the costs in future quarters are going to come down. Obviously, we had a large structural spend last year on legal 50 state review. As we talked about, this year has been quite heavy on tech development for our other verticals, and some of those costs go away moving forward. So our structural base is very sound. Just from a disclaimer standpoint, obviously, as I mentioned at the start, some of these comments would be forward-facing comments, and no, that's good. That's kind of more of an overview. Looking forward to some questions. Anything specifically around the verticals and the expansion of the verticals, I want to make one thing super crystal clear for everybody. We have been driving other verticals in a complementary fashion to our main goal of the Uber for nurses. We have our structure can support other verticals and give us a more holistic solution, and that's what we've been aggressively working towards. So excited to answer any questions.
Perfect. I will ask some questions as I do see them here in the chat. Again, just a reminder, if you do have questions, please put them in that Q&A section and we'll try to get to as many as possible. So I do see some here. We have, can you discuss the separate revenue streams growth percentage of lab services, GLP-1, aesthetics, IV hydration, NAD?
Absolutely. So as we've been, Abby, just so I can be pretty specific, can you read the question one more time?
Yes. So it says, can you discuss the separate revenue streams and growth percentages of lab services, GLP-1, aesthetics, IV hydration, and NAD?
Yeah,
so
absolutely.
The separate revenue streams, how they relate.
Absolutely. So obviously, most people on the call would know that we started off with our flagship product as IV therapy, and to suit the company's goal of being the nation's first mobile medical clinic, we diversified and added on. That was always the goal of the company. So we are still heavily on the first product. So IV therapy would still make up 80% of essentially the entire services done that we see on the financials. Now, our GLP-1, so it's slightly long-winded answer, but it's very important to get all of this information out. Our GLP-1 offering at Hydreight is very different to the rest of the markets. This involves a healthcare professional. It involves a lab test, which the market doesn't see right now, but there's going to be a lot of blowback because of underlying conditions and long-term GLP-1 use. Our nurse platform offers a service where a lab is collected, that is analyzed back to, results come back to the app within 24 to 48 hours. The physician reviews those, and the plan is appropriated from there. That's the highest level of care you can get in the GLP-1 space. So I just wanted to make that super clear. Now, because of our vertically integrated pharmacy, we're able to do that in a fashion that our nurses can still tremendously benefit from being involved in GLP-1. The customer is getting the white glove healthcare professional approach to something that doesn't exist in any other area. We're the only company that involves a healthcare professional visit for the same price. So for the consumer, it's amazing. For the nurse, it's amazing. And then from a healthcare perspective. But the aesthetics has always been a small part of our overall business. That still takes up maybe 1% to 2%. It is something that can be expanded on, but it is not something that is huge at the moment. And then our lab testing. So the GLP-1 lab is a piece of that, as I just described it, but it's built into the overall service. What we have mapped out for Q3 and Q4 is a whole set of additional labs that are more around the genetic side that will lead to a service. So right now we have integrated our labs into a service like the GLP-1. What we're releasing in Q3 is a whole other set of labs that would lead then to a service. So kind of completing the loop on the individualized healthcare, because that's where healthcare is going. Is a lot of the problems in the current hospital industry, the current hospital situation is because everything is reactive. So with Hydreight Technologies and our various verticals, we are going to be essentially the first line of defense, right? So individualized healthcare, being able to get a test, get the results analyzed in very short time, and have a healthcare professional come out upon those results. That is the circle there. So sorry for the long-winded answer, Abby, but I wanted to explain the various trajectories of each service.
No, that's great. Let me see the next one here. Please discuss the growth of brick and mortar white label locations signed and onboarded.
Yeah. So again, our offering allows the bricks and mortars to utilize one, two, or all of our offerings. It doesn't have to be everything or nothing. So we see a lot of the bricks and mortars have a huge challenge with some of the laws that are coming out. So they need to be able to have access to a physician network, access to compliant pharmaceuticals, EMR and tech. Obviously, need to marry with those first two. So that's where the attraction is. As COVID has finished, the laws have come back and actually come back more stringent. So a solution and a structure like ours that you can simply plug into is only becoming more and more attractive. So the bricks and mortars have been coming in very steadily. Obviously, they have to build out. That's why there's a slower, increase, if you want to call it that, because they have to be released, right? So essentially, you might have a white label that has 700 locations, but they may be releasing 5 a month, or 20 a quarter or something like that. So we have well over 100 bricks and mortars active now. So a lot of the opportunity is in front of us with those. We have a number of white labels that utilizes in different ways, and a lot of this has been inbound. Business as we've been building out the network, right? We haven't gone aggressively after other franchises yet. As I said, we've been focusing a lot on the structure, so a lot of that opportunity is in front of us. So that's only going to grow as these bricks and mortars open up.
That's great. I think this leads into one of the next questions that I see here. It's a question wanting to know a little bit more information on the VSDH1, who would be potential clients, and if we've signed anyone already.
Yes. First part of the question is yes. We have signed over 5 businesses who want to promote services in all 50 states. Again, our model is incredibly unique in that it's a B2B2C. So to answer the question, who would be a particular customer? So anybody who would go to a website like a Roman or a Hims that would want a service that can be self-administered. Okay, so that can be something in the discrete range like sexual health, skincare, hair loss, or GLP-1 peptides. So covers the whole gambit. What we do is, because we are the healthcare organization that the software sits on top of, is we can give the businesses a plug-in. And because of our corporate practice of medicine structure, we are the only company that I know of that can do that legally. Other companies have to set up, promote themselves only, and go through the whole thing. So there's a huge cost. The beauty for our business partners that are coming on are essentially they can focus only on marketing their business and driving patients to essentially our medical clinic. So it's more of a B2B relationship as opposed to just a simple software where you're hands off. So the opportunity there is incredible. So we all know the space. It's a $1 billion space, multi-billion-dollar space with the GLP-1, the peptides, ED, hair loss. All of these services are done on this one. We had launched in our beta. We've got 5 50-state companies. We have another company that wants to do something very expensive, but we haven't signed anything there yet, so I won't talk about that one. But again, this is we haven't gone on the offense on that one either. This is just about to be released, and this has been released. It's just about to be monetized.
Perfect. And then I think this one leads into kind of a second question off of that one, before there's a few questions on some of the financials. But this one is asking, is at-home testing with healthcare professionals in the 50 states part of near future plans?
Yes.
For services?
Yes, so there's 2 types of at-home test. Just to clarify again, this leads into why we have 3 different verticals to be the holistic digital health solution. There's an at-home test that requires a healthcare professional, so that would fall under the Hydreight vertical. Okay, typically those are blood tests, something that needs to be, basically done by a healthcare professional. Sometimes it involves a centrifuge because it has to be spun prior to sending, which is all built into our flow at Hydreight. Then there's the self-administered test, so saliva, pinprick with blood, which isn't as effective as an actual blood draw, and other types of self-administered. So there are 2 different offerings. So on the VSDH1 offering, we would have one which is self-administered, and if it requires a healthcare professional, that would be on the Hydreight vertical. And that's what I referred to earlier, is whilst we integrated with our nationwide labs and we did all our technology, the GLP-1 on Hydreight is the one that has a lab involved in it right now. We've scheduled our full list of services to be released in Q3 on Hydreight. VSDH1, obviously, as we just talked about, also is a Q3.
Perfect. Thank you, Shane. And now I think there's some more questions here regarding the financials. So I will go into some of those ones now too.
So I just wanted to answer a few of the questions within one. And when you look at this growth that we have from revenue perspective, this is the organic growth because from a year and a half ago or 2 years ago, we identify few acquisition targets that is going to help us with the services and also is going to help us with the revenue. But after the analysis that the management team, the board, and everyone else within the company did, we realized that we rather to invest that money within the company because it's in our control, more than having a third-party company joining the company with joining, the original company from the revenue perspective. So the risk of the failing in the revenue projection will be a lot less if we focus on what's in our hand. So, we reinvested it within the business. We created the verticals that Shane walked you through it for maximizing the revenue potential for the company.
Perfect. Thank you, Vahid. And we'll go into next question here. Are there any plans to sell the company, or do you foresee any such conversation?
I can answer that question. So when you look at this, this industry, there is a lot of the bigger companies that they have no problem with the customers. They're going after the very high multiple of acquisitions. We look at Uber, you look at Amazon, they just want to build that. We as a company, we know what's the real value for this company. So right now we're heads down to create that company and get to the revenue that makes sense, even consider any M&As. From all the main shareholders, they are in for a long term because again, we have a vision for this company. And when you look at the graph for the revenue, we're not another small cap company to just have a graph for projections. We have a graph that is showing since 2020 and will continue working hard to get to those numbers and creating more verticals. So to answer to this question, right now, again, it's not for lack of interest, is the fact that we know what the real value of this company is and what are the multiples that is in this industry. M&A is happening. So we were heads down focusing on the priority of the company, which is revenue, profit, and also adding all different verticals that the infrastructure and technology that we have invested in the last few years, paying off to the maximum number as possible.
Yeah. And I'd just like to add a little bit. One of the reasons I sparked is it's all about value, but it's all about perception too. I think numerous times on different meetings, with the investors, I've said that these are not exciting numbers to me. We've essentially in 4 years 50x the revenue, if you want to just use top line here. In our Q3 and Q4, we have simply gone off of Q2 as a projection. So we're somewhere, well over 20 million. And 50x is $1 billion company. That's in line with what I see. All of the opportunity that I see is in front of us. So sure, I mean, we would entertain something that would benefit everybody, but it would want to be significant because the opportunity is now. This is the way I see it. So sorry, Abby, I just wanted to say that.
No worries. I think that also goes into some of the other questions coming up. So we'll continue on. When does Hydreight expect to have a positive earnings quarter?
So as we stated it in the first quarter, that our goal and our projections in the forward-looking way is that we're going to be positive before end of the year. We were expecting our adjusted EBITDA, which all the non-cash is out of it, non-cash such as the RSUs that we gave to the team, or some of the exchange rate or some of those things. We're expecting to be Q3 that we achieved in Q2. Again, our goal is before end of the year to be a fully profitable company, which basically again we're ahead of our projections, and the adjusted EBITDA numbers is one of the indications of that. And the investment that we made around the VSDH1, we're expecting again the numbers for VSDH1 to start showing in Q3-ish, Q4, at the very significant way. again, these are the projections that we're having based on the signed customers and everything else. I'm moving forward. So we're still projecting before end of the year we'll get there, and we continue updating the shareholders and the market on any changes. And again, adjusted EBITDA that we had, there is, one of the signs that we're ahead of our projections that we're expecting that to come in Q3.
Perfect. Thank you, Vahid. Another question here. M&A were supposed to be a key pillar for growth in 2024, mentioned in previous webinars. Have they been postponed due to suppressed share price to avoid dilution, or are they still in the pipeline?
So I answered that question earlier. We still have few targets, and the way that we kind of hook them is we have a 12 months partnership agreement that anytime we can acquire the companies. So there are a few different considerations for us. One is, what is the best way of spending the cash that the company has that bring the maximum value and the revenue to our shareholders? The second is, we know the real value for the company. If we want to do any share-based acquisitions, if the real value for the company to be recognized in those acquisitions, so we won't be diluted. So the short answer is yes, still is part of the plan, but there are criteria for us that we know that the company won't be diluted, and also there is not gonna take too much cash that we have at this time when we see other plans that we have, and those injections can end to a better results for the company.
Great. Thank you, Vahid. There's another question here. Is there interest from institutions, large investors, to buy blocks of stock as in private placement? Has VST thought about selling block of shares to institutions?
I can jump in on that. There's definitely been interest from institutions now starting to take a closer look at Hydreight, just given the significant growth and where it's trading at. I think from a VST perspective, we're long on this. We're actively involved within the business, and we've seen the growth that Shane and the team have created. So we don't have any sort of interest in selling, especially when it's trading at, I think, 0.5 times revenue, when most multiples are on 5 to 6 times revenue in this category. So now, having said that, if there was a really strong strategic that came to the table, and Shane and the team felt like it would be an investor that could, significantly provide more exposure and help with the growth and get it to where it was going, we would for sure, participate and do whatever we needed to do to support that. If that was kind of the guidance that Shane and the team gave us. But we don't, again, have any intention of selling. We're long on this. We're an insider, so we have to disclose if we do have any sort of movement. We think the company is significantly undervalued. I mean, just looking at the growth year over year, 4 consecutive years, I think we're excited about where Shane and the team are taking this. But again, if there's an opportunity to bring a really good investor or institution to the table, we would for sure be all ears.
For sure. And just to add to that, Abby, we're not going to dilute the investors. We're not going to throw away the opportunity that we've been building here. And the capital is only one side of it. As I said, we're looking at being cash flow, positive in our Q3, hopefully, Q4 for sure, hopefully Q3. So any type of large partnership is going to have to bring something more to the table. It's going to have to be a partnership that has an outlet for our verticals that is going to expedite this in real time. That would interest us greatly, and we are having a number of those conversations. But just capital-based conversations, no.
Perfect. Thank you. Shaf, I believe this is another question kind of directed to VST. It says some investors are concerned about VST holding 70% of the shares in Nurse. Might VST put their shares in escrow to reassure investors that those shares won't be sold in the market?
Yeah, we would be completely open to that. And I actually think that we haven't even looked at the shares. I don't even think we've deposited the DRS for them. But I think that a large majority of VST shares are escrowed over 3 years anyways. I actually think that that is the case. But if there was a request for us to do that, absolutely. There's no interest in selling, and if we had any sort of intention, we would have to disclose it Yeah, so I'll look into that, but I have a feeling they are escrowed over 3 years.
The VST shares are they're screwed up to 3 years. So we have different basically time that they will be released, but majority of that is over 3 years. And they're all in the original filing statements. You can look at the schedule for releasing the VST shares.
Perfect. Speaking of verticals, so this was going off of your another question, Shaf, I believe that you answered. VST has another component called Insu Therapeutic. A business model utilizing your VSDH1 system could be a full new vertical for you. Just a thought, would you consider this?
Absolutely. So not only Insutropical, but also we have few other products that they have approval or they're getting approval, and our doctor of pharmacist and our medical director have been vetting those because you have to understand that it's not only offering the product, it's just adding it to a shopping cart or an e-commerce website. The whole advantage that we have is the fact that depending on the type of the product, the process and the flow will be defined by our medical director and our pharmacist. That if they need any synchronized or asynchronized contact with the doctor, what should be the approval, if there's a blood test needed or not, what will be the checkup, what will be, all that has to be defined. So there is a big list of the product that right now, as we speak, are being reviewed by our medical and pharmacy team to be added. And few of the products is actually like we got our hands on them as a first channel of the distribution that we're working on that, and will be added to our for lack of a better word, catalogs of our offering. So the answer is absolutely, and we're very open to that.
And I just want to add to that too, which is kind of an interesting take on this from an Insu perspective. There's two things Insu is working on right now. One, which is getting access to compounded versions of, let's say, semaglutide or tirzepatide. There was a direct correlation into sourcing it or talking to Shane and the team to source it. So their access to product becomes super valuable for Insu specifically, let alone I'm sure other companies as well. And then the second is one of the things they're working on is around the CGM, the glucose monitor, where the hardware, the software, has kind of become commoditized. There is something very interesting from a needleless version they're working on, but it's again Hydraight's distribution to be able to operate in all 50 states and have nurses to be able to to perform and assist with patients is such a huge competitive advantage. And so just another take from an Insu perspective is Insu would definitely obviously love to be able to collaborate wherever possible. And Insu's work on diabetes and obesity is a direct kind of tie-in into the Hydreight distribution and network. So again, it's super advantageous for Insu, and I think this would be the case for a lot of companies.
Perfect. Thank you so much. And I think we are just running in on time here. So just going to do the last question. And then if we didn't by chance get to any questions, feel free to send an email to ir@hydreight.com and we'll try to get to them then. Or if we do need to have another webinar, we can also look into that as well, just to be mindful of everyone's time. So the last question relates to the platform itself. So there's kind of two questions that I'll put together here. So first part is, can a nurse be employed by another nurse within the platform? And is the platform primarily nurse-centric, or are there plans to expand to include other healthcare professionals such as podologists, physiotherapists, and chiropractors?
Yeah, so great question, first of all. Yes, a nurse can be employed by another nurse, but employed is the wrong word. So there's a license involved for the subscription that allows two other providers. That is to basically allow the initial nurse who is paying the subscription to have a team that can, facilitate a lot more orders. Remembering that this starts off in many cases as a side gig, and then, they cut down hours in the hospital, or in some cases start making hundreds of thousands of dollars a year. So yes, that's the whole model, right? And that's sometimes sharing the price is something to do, but employed is the wrong term to use there, because every independent contractor, i.e. nurse provider on our platform, is an independent contractor of our medical company, right? So the license can support multiple nurses. That's the way I would word it. Regarding the categories, we wanted to get really, really good and really niche at one offering first. As I said, there is 4.5 million RNs. We didn't want to dilute the offering, the message. We didn't want to, go off in these other tangents, even though they are possible. So the short answer is yes. We actually have been approached recently by a couple of organizations who would like it. There's a tech component to that, and then obviously there's an operational component. This is not something you just plug into and everything works perfectly. So we wanted to get absolutely proficient at offering our nurse platform. Obviously, those independent contractors are tied to our medical company, so there's a medical direction component. There's the rolling out of new services. There is the renewal component. So these nurses, a lot of the focus is on getting them to stay on for multiple years. So the expansiveness is there for the platform. We're not tied to one user type, which would be an RN essentially, and we're not tied to one category of provider. So it is there, but we have so much opportunity in the RN space alone that it's not hugely. If an opportunity that is plug and play and will benefit the business, absolutely will entertain it, but it's not on my radar right now.
Perfect. Thank you so much. And we just want to close it out there. Thank you so much, everyone, for joining us today. And if you did have any other follow-up questions, feel free to send an email to ir@hydreight.com, and the team will be happy to assist you and answer those questions. But thank you so much for joining us, and we hope that you guys also enjoyed this webinar. This webinar was recorded, and so we will also be sending you the recording shortly after as well. Any last comments from the gentlemen?
Thanks, everyone.
No, thank you. Thank you all for your time.
Thanks.
Thank you so much. Have a good one. Bye now.